All right, welcome back. 8 years ago, China was a different animal, right? They were much stronger than they are today, and we're much more intertwined with our commodity markets back then. They were all over the place. But since then, their economic power has waned, right? So much so that they have had to deploy 2 big stimulus packages to help spur on that economic growth, and they've both really been slow to gain a lot of traction. China has been suffering from a deflationary crisis since 2023, so an uptick in exports during the pandemic was offset by the CCP's draconian lockdowns. Remember how bad those were? This was essentially fiscal suicide on the part of the government, and China has been struggling ever since. Their property market has imploded, partially due to overbuilding through government-subsidized infrastructure programs that flooded the market with poorly constructed homes and buildings that were left to rot. Corporate defaults have run rampant and left investors with absolutely nothing. So who has the leverage here, the U.S. or the CCP? My next guest is going to have something to say about this. Please welcome to the show, Ms. Rebecca Walser, Walser Wealth Management. Okay, Rebecca, just popped in my mind. I forgot this stat. This is a great stat. From the year 2000 to 2010, China poured more concrete than the U.S. ever poured concrete. How about that for fake cities?
Wow. That is, I gotta really marinate on that for a little bit. You're exactly right. So China is a victim of its own imagination, right? They believed that they could, through a communist Chinese party and a quasi-capitalist, in other words, you can invest, we'll take your investment dollars, but ultimately the business will still be owned by the CCP and the actual government. And so that's how they became quasi-capitalistic and really traded well with the United States. But to your point, they literally, there was an actual, I think it's 60 Minutes on it where they went over there and they actually showed the ghost cities that they did create. Like they built bridges and infrastructure and roads and malls and condominiums, and they sit empty. And Scott, they basically thought that their citizens and their mortgages work different over there. You actually have to start paying your mortgage before your property is even completed. So it's different than the way the United States finances property over here at the retail side. So what we're talking about is a country that always tried to get at least a 5% growth rate, even through artificial government printing and government stimulus means, and it didn't matter. And they thought that eventually they would grow their middle class enough that they would be able to sort of then move over to a more of an Americanized model or more domestic consumption, even though their plan all along was to continue to export until their middle class grew enough organically to sustain that. The problem is that, to your point, when coronavirus came out, they went to a zero COVID policy, and that shut down their ports. That shut down everything. Foxconn was a mess. You had Apple saying, oh my gosh, do we have to pull out? Do we have to literally change our supply chains? And so the problem is they thought not only can we basically grow our own real estate economy and invent economy and invent capitalism here, consumption, but we can also, when a pandemic comes along, completely shut everything down and still print and everything will be fine. And what they are finding out is that even though they're communists, the rules of economics and the laws of supply and demand still apply to them. It doesn't matter if you're communistic. You can't just say the rules of economics don't apply to us and we're just going to ignore them. And now you have a situation where their economy is absolutely, if they do not get major stimulus that actually results and actually stimulating the economy. What they have already done, their 2 sets of stimulus they've already done, has really been more on the banking side, and it hasn't forced the banks to actually lend money out. So if capital's not going out, it's not going to have an impact. And so what you have now is potentially a Chinese economy that could collapse. Now, I am not suggesting in any way that this is good for America, because their economy collapsing means that on top of the tariff issue and on top of the direct tit for tat trade war that we are in between the United States and China, we could actually have major supply chain collapses, which would impact us severely, while we are also very, very fiscally weak, monetarily weak. And obviously, Scott, the biggest issue here that's going on globally is liquidity is drying up. And that is what we all really have to be watching, is the liquidity. Look at the Treasury General account. Look at it. Look at how low money is in it, comparatively speaking, to the last 3 years. And you can understand we're really getting into a quagmire here of problems.
All right. So you're a wealth manager. I mean, do you have a lot of customers that want to be invested in China? I mean, what does the world look like if we have to delist all of our Chinese stocks? I mean, what happens if we continue to march down that road?
Very interesting question. And so we had just mentioned in the last couple of weeks, like Alibaba, obviously very much probably tariff safe because they are so deeply embedded in China and even the Middle East and some in Europe. So if Trump were to say just completely tariff China, you could buy an Alibaba and that could be kind of, not affected by that. But Alibaba is traded on U.S. exchanges. And now we're talking about delisting Chinese stocks off of U.S. exchanges. And I have to say, as a patriot, I don't disagree with that. I do think that the American stock exchanges should be really for, U.S.-based multinational corporations. But again, this is a way that certain investors could have gotten access to maybe something that was a little less tariff sensitive. And now that could be called into question. And I don't think that that's wrong necessarily.
Well, this is going to play on, that's for sure. I think this might actually only just be the beginning with what we've been happening with their economy and the tariffs. So thank you very much. Awesome take. You're a big fan favorite. Love to have you on. We'll see you again next week. Thank you very much, Rebecca. Rebecca Walser.